Hi everyone, welcome back to Corporate Decoder, the place where we decipher the sometimes wacky world of corporate filings. Today we're diving into TCW Star Direct Lending's annual report, or Form 10K. Let's see if their direct lending strategy is on target or if it's more like a direct hit to our expectations. Buckle up, because we're about to decode some corporate secrets. TCW Star Direct Lending, or TCW Star DLG, as I'll call them to save time, is a direct lending investment company. In short, they make money by lending it to other companies. They focus on what they call middle market companies, meaning not huge corporations, but not tiny startups either. They aim for those in-between businesses that need capital. The main focus of a 10K is, and should be, the financial results, so let's jump into those. We're going to look at their performance for the year ending December 31, 2024 and compare it to the previous years. First up, let's look at investment income. In 2024, TCW Star DLG raked in $21.2 million. That sounds pretty good, right? Well, in $2007 million, that sounds pretty good, right? Well, in 2023, they only made $10 a zevi. Now, it isn't all profit. The guys at TCW Asset Management Company LLC, the advisor, don't work for free. We see expenses too, their management fee for managing the fund for 2024. TCW Star DLG paid out $1.7 million in management fees compared to $1 million the previous year. The reason for this increase is also because of more assets in the portfolio, so the manager takes a bigger cut. Then there's the incentive fee, which is an extra payment they get if they perform well. In 2024, this fee totaled $2.4 million, a sizable jump from the $1.2 million in 2023. Again, better performance equals bigger paychecks. So what does this all mean for the investors? Well, TCW Star DLG's capital increased by $13.7 million in 2024. That's the final number. What's left after everyone gets paid and all gains and losses are counted? To understand where those earnings came from, it's also important to look at the investments and their fair value. These numbers gives you a snapshot of the types of companies they're lending to and the potential risks involved. The numbers are what the company estimated the investments to be worth, not how much money they were really making from those investments. The company used about $15.8 million in operating activities that mostly go into investing into various companies. So the fund managers are making good money, but where does that money come from? The commitment section mentions that investors were on the hook for $375.3 million remains to be drawn down. This means they still need to invest a lot of money, so keep an eye on what they put their money into and how that affects their financial health. It sounds like they're geared up to lend out a lot more in the near future. Alright, but it's not all sunshine and profits. It is time for every corporate filing's favorite chapter, the risk factors. This section is there to scare you a little, but it also contains valuable insights into what keeps the company up at night, so let's dive in. Here's a big one: market and geopolitical events. Basically, anything from economic recessions to wars to changes in government policies could mess with their portfolio companies. Another concern for TCW Star DLG is disruption and instability in capital markets. They are worried that financial markets could experience some serious turbulence, which then translates into less money and investment opportunities for everyone. The report states that failures in the banking sector have caused significant disruption and volatility in US and global markets. And a big one for people working at TCW Star DLG: economic interest of the advisor. The compensation structure could incentivize the advisor to chase riskier investments, which in turn can leave you, the investors, in trouble. Also, get this, since the company is now more public, they have to spend a lot more money on just being registered. This is not a surprise for those familiar with securities trading. There's also the rules of being a BDC, or business development company. Regulations are complex, but one key rule is leverage, or how much debt they can take on. They are also required to jump through hoops to avoid any conflicts of interest. Finally, let's see what's going on with the key people involved. There's a whole section dedicated to the Private Credit Group's investment committee. One interesting new part is cybersecurity. They've added a section describing their cybersecurity risk management and how they protect their systems. It sounds like it is all in good hands, but it's a growing risk for everyone, including TCW Star DLG. Finally, the signature page: Richard T. Miller, President and Director. TCW Star Direct Lending LLC will file with the Securities and Exchange Commission not later than 120 days after the close of its fiscal year ended to fin December 31, 2024 FAV or loss, and they are attesting that in their proxy statement they will contain even more information about all of this. So more reading material to look forward to. Now, let's step back and look at the big picture. TCW Star DLG seems to be riding a wave of growth. Increased investment income, driven by a growing portfolio, is definitely a positive sign. The investment management and incentive fees are very high. The risks that the company reported on this document seem standard and are present for all companies of similar size. So, as the investors, you just need to hope that the fund managers know what they are doing so they can get past these troubles. Looking at 2024, the company took more risks and was able to successfully grow even more. This resulted in higher revenues to its investors while also paying higher returns to its managers. I'm liking the numbers. Thanks for watching. If you found this breakdown helpful, please give us a like, drop a comment and subscribe for more corporate deep dives.